Oil has entered bear market territory, down 10%. Price futures groups, Phil Flynn is at the CME Group with the trade. Phil, oversupply concerns weighing on this market, and we look at a bear market when something has fallen 20% from the high,
right.
and that's what's happened with oil.
It has in just a very short period of time since the last OPEC meeting, and we're really getting into not only bear market territory, but dangerous territory, not only for U.S. shale producers, but for the global economy. When we're seeing these prices fall like they have so dramatically in such a short period of time, it's raising warning flags about the global economy, and it's really raising warning flags for U.S. shale producers that are conspiring to drive these prices lower by raising production. But already with this price drop, we're seeing signs that the U.S. shale producers are having to pull back. U.S. production this month is falling far short of expectation of increases, and the rigs that they've been putting into the ground like crazy are not being completed. That means they're not going to bring oil to the market. And it really makes you wonder, you have a political shakeup in Saudi Arabia, you have tropical storm Cindy going right into Refinery Row, and oil can't muster a rally. That shows you how bad the sentiment is in this market right now.
Bill, I'm glad you brought up the oil rigs, because I've seen 22 weeks in a row we've seen consistent increase in oil rigs. We look at the Permian Basin, they can pull out a barrel of oil, sometimes in cases of $20 to $25 a barrel. We are now an exporter nation. Over 1 million barrels per day are leaving this country on takers and going out, which started last year. So don't you think that's one of the biggest overhangs when it comes, is that we are now energy independent. We can get oil at, in some cases $20 to $30 a barrel. We can export it out. We are now energy independent. Isn't this an overall good thing for our economy? I mean, every other sector benefits from lower energy costs. Our shale producers are adjusting to the new dynamic in the marketplace. What is your take on this? Isn't this a good thing for the U.S., not only the producers, but also the consumers?
I think overall it's a good thing, but in the short term we have to learn how to moderate prices better and moderate production, because we're going to put ourselves out of business. We have to learn from the OPEC cartel a little bit to be a little bit of a moderator. I really question that $25 number in the Permian Basin, especially when you look at these other basins that are a much higher level. And the thing you have to remember, you talk about all these rigs we added, they started adding those 14, 15 weeks ago. That's when they started adding those rigs. That's when the price of oil was $10 higher. If they were really happy that they were adding those rigs, they'd be completing them right now, and they are not doing that.
All right, we'll be watching. Down 20% from the high in February, down 60% from the all-time high of $115 a barrel on oil. Remember those days. Phil, good to see you. Thanks so much. We'll be watching this market. Phil Flynn joining us.